Okay, so today we're going to do an in-depth analysis of the data in front of us. We're going to take a look at Bitcoin and see how can we plan for the week ahead. So I'm going to get rid of all of this, and we're going to start from scratch, from sketch. We're going to have a blank canvas, and we're going to build on the narrative. I'm going to get rid of this as well. Okay. Now it's worth quickly taking a look at our previous posts. And by the way, also, big welcome to everyone who's joined the channel recently. We've had quite a few members join. So yeah, let's see what Bitcoin's saying as far as the high time frame. So if we start off from the monthly, we're just going to do a top-down analysis all the way from the monthly, all the way to the 15 minutes to see what's going on. So on the monthly, we had high low, high high. We had a nice SFP. We transitioned market structure. We had another transition in market structure here, which led to a high low, and a high. Okay, so on a monthly, we can see that we are in a monthly uptrend, which is good to know. Okay, although if we drop down to the weekly now, if we just drop one time frame down, we can see that all this monthly price action here becomes void, becomes irrelevant. We're not waiting to trade this, so as a result, we're going to primarily focus on what's going on here, because if we're waiting to trade, the results of this entire range, we could be here forever. So let's take a look at where we are. So as far as our weekly structure goes, if we start from just this low to this high, our weekly structure looks something like this. So if I change the color of that, let's go blue. And we have from the bottom, we have high low, high low. We have a high, we have a high low, and then we have a high. Okay, my cursor has been misbehaving lately, but this is what our weekly structure looks like. That means as far as our weekly goes, our last bit of support slash demand is sitting right around here. So if we simply draw that in, just so we know exactly where that is, we can call that our last demand range. So that is a sweet spot. If we are to break below this range low, that is a sweet spot to potentially look out for. So I'm going to get rid of my primary structure. And so now we have a clearer picture of what's going on. We know on a weekly, we are in an uptrend. However, on a weekly, we are due a retracement that looks something like that to carry on further up. So we're not going to be waiting, all right, ages to get into this trade, because if we did that, we might not be into a trade until about April, May. So as a result, we're going to zoom in. Let's drop down to the daily. And as we drop down to the daily, we start to see more defined market structure, which is exactly what we want to see. So if we analyze this expansion leg again, this last leg in our daily, then our daily structure looks like this. We've got high low. We've got high low, high low. We can say that we have, I'm going to go all the way up here. We've got high low. We have SFP off that high. Okay, that brings us back down. But what I'm going to do is I'm going to treat all of this bit here as one move. And I'm going to have this as the retracement. And then we're going to say, right, what we've seen recently is that SFP of that high, and then we are in this internal swing structure. So I'm just going to change the color of this so this can be clear, especially for those of you who are new to market structure and are trying to make sense of this. I'm going to make that green. Okay, so as I make that green now, I'm also going to pull this up just so we're nice and accurate, so we know exactly where we are. So this is our, we can call this our swing structure, and therefore, or our primary structure, or our one structure. Therefore, the green is our structure number 2. So we can clearly see, based on our structure number 2, that we got a nice SFP of that high, so nice SFP there. Let's give it a nice X. Okay, showing that this potentially could be a weak targeted low. So as a result, this is a structure point to be wary of. Now, what we also see here is that if we look at a break of structures from the low all the way to the high, we can clearly see that the break of structures tend to be reducing as we've rallied up. And what I mean by that is, if we calculate the break of structure from that high to that high, we can see we have about a $3,000 move, or almost a $4,000 move. And if we calculate the break of structure, perhaps from this high to that high, we can see we have around a similar intensity of move, about a $5,000 move. And then we had this massive impulse here that gave us a $25,000 move. Okay. And then after that $25,000 move, we're expecting, nice, continuation of the bulls. However, what happened was we got a relatively mediocre $12,000 move, and which has then resulted in another impulse up. Well, that impulse up was simply an SFP, so hardly even a break. So about a $1,500 move. What does this tell us? Well, for those of you who are, you know, for those of you who've been here a while, you know that this is signifying the potential of a range. So at this point, what I do is I say, right, so I take that fib from that range high to the range low. I'm not going to use it as my Fibonacci. Instead, what I'm going to do is say, right, this is a potential range. So I'm going to change it to my range model. Let's use a range model 1. Okay, whereby this is the high of our range and this is the low of our range. So we're going to treat this the way it's meant to be treated, as a range, knowing that we have a swing high there, we have a swing low there, and all of this here is internal swing structure. Okay, once we've deciphered that, we might want to drop down now to perhaps let's drop down to the 8 hour, just to see exactly what's happened. Now, as we expect in a range, we oscillate from the range high to the range low. So we've come into this range, all right, we've deviated from the range low, we've come to the equilibrium of this range, we've then come back down for a 3-tap model, 1, 2, 3, then deviating the range low again. That propagated us to the range high. Now we're tending down to the range low, and we also know this is a weak targeted low. So our structure based on this range, I'm going to get rid of this blue structure as well. Okay. Of course, we know we're waiting for a long down here. That goes without saying. But we're not concerned about that yet. All we're concerned about is this range and how we're going to play this range. We are aware that we do have some fair value gaps. We've got some fair value gaps over here that could easily get filled. Okay, we are aware of that, and we'll talk about that in a second. But in the meantime, let's get rid of this primary structure because we're only concerned about what's going on in this range. So looking at this range, this structure on the 8 hour, even though it looks all right, I think it will look a lot better on the 4 hour. There we go. See, on a 4 hour, we can see what's going on here. So on a 4 hour structure, if we simply draw the internal structure, it looks like this. We've got the structure from this high to this low. It looks like this: low, 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 high. And it looks like we have a low, low here, a low, high, and we have another low, low. Okay, so this is what a 4 hour internal range structure looks like. Now, what am I looking out for? How do we trade ranges? Whenever you have a range, let's say this is your range is usually split into a few regions. First of all, your range could be split into a your range is split into your discount and it's split into your premium. So above the 50% line, we're going to treat everything there as our premium. We look to sell in our premium, and then we look to short long in our discount. But not just that, we can also split that premium into two and say, well, this is our extreme premium level. And we can also say, hey, look, this is our extreme discount level. So for anything above that extreme premium level, we're looking to short. So anything above here, we're looking to short that for a nice minimum of a 3.3 risk to reward. And anything below that extreme discount level, we're definitely looking to short long that. So that's looking something like this. And that's exactly how we're going to be looking to play this range, something similar to that. So if this is our range, all right, you can imagine if you have your equilibrium line bang in the middle, I'm sure you can imagine that. So we are, tending towards the extreme discount of our range. We've obviously come to the premium, which some of you would have shorted. Congratulations if you did. Now we're looking at the extreme discount of our range. So based on that, in this region here, it makes sense to look to prioritize longs, especially if we are going to get a rotation back to this range high. So in that sense, what I would do at this point is say, okay, right, well, let's see what our structure is saying. Is there anything within this range or within this internal leg that could potentially keep us up? So are there any supply or demand zones? So let's quickly take a look. So if I go to the 12 hour, nothing there, 4 hour, nothing there. I'm quickly just going to whiz through this. We can see we reacted off this nice 8 hour zone, which gave us a bit of a move. We reacted off this nice 8 hour zone that we can see over here. Okay, and that gave us a bit of a move, but it didn't quite break structure. What I mean by that is, the potential for that 8 hour block was to close above this level. However, it gave it a good attempt. It gave us 2 bull bars, 1, 2. However, it started to deteriorate a bit more, which kind of suggests that maybe it's coming down a little bit more, and maybe this internal, market structure trend downwards is just continuing on for potentially a higher low and another sorry, a lower high and then a lower low. Okay, so something like that. But we're yet to see what happens, so we can't quite, predict that. But what we can do is prepare. So let's take a look at this zone here and see, is there anything trapped in that leg that could potentially keep us up? It looks like we have a zone here. So we quickly take a look. No, that's already been mitigated. So we quickly whiz through and we just see whether we have anything in there that is of interest. Yes, we do. We have a nice little 45-minute block here. And this 45-minute block could potentially keep us up. I'm going to pull this all the way down here. And it could potentially keep us up. And I'm going to label this block appropriately so that we know that, first of all, it is a demand zone. And secondly, it's a 45-minute demand zone. So we're going to change that to a 45-minute zone and just, keep that at the back of our mind to know that, hey, that is a potential POI as we are to come down. If we start, failing this zone, that means we're probably headed down to this point. If we start failing that, that means we are most likely looking to actually sweep this liquidity that we have here. We have some liquidity over here, which we could easily sweep to fill these fair value gaps and reestablish efficient price action. That will then suggest that, hey, this is our next zone to watch out for. So this 45-minute zone is a key zone in my opinion. It's a zone to watch for, and because it's a key zone, it's a zone I'm gonna either look for a long. I'm gonna look for a long there, and this may not be a swing long. It may just be a retracement long in a sense that our price action is coming down, it's coming up. Perhaps it comes down, it gives us a little pump before it drops fully, or it could obviously be the reaction that then breaks this structure here. But we're going to be watching to see that. But that is definitely going to be a scalp to begin with, and if it does turn into a swing or a trade that I can hold for a bit longer, then so be it. So that would be trade number one, trade numero uno. All right, so what is trade number two? What we're looking out for? Since we are in the topic of longs, why don't we find another long trade? So in analyzing this data, we know that when we are in our extreme discount range, we should be looking for longs. So it makes sense to actually look for another long right around here at the absolute extreme of our range. Now, the reason I'm doing that is because even though this is a range that's been around for quite some time, this range we're looking at right now has been active for about 49 days. Some people might say the entire range has been active for 72 days. So between a month and a half and about almost 3 months, 2 months or 2.5 months. So it's definitely arranged to now start, paying attention to, because it's developing, it's built this liquidity, which is obviously going to decide whether it's going to go up or it's going to go down. And that move is probably going to happen quite soon. But regardless, I'm going to go up to the 4 hour and plan this trade here. So as we've got this trade here, what would I like to see? Well, based off of this trade here, what I really want to see to enter this long is, first of all, take out this level. And in taking out this level, we would have a potential SFP where we have SFP the top, and then we come back with a weak targeted low. We SFP the bottom and come back with that weak targeted high. So that would be the idea there. If there is a zone here, I'm sure there might be a zone here. If there is a zone here, this would be a beautiful zone to get some juice from. But otherwise, what we're going to do is say, okay, we're going to look for a long here. But what I want to see to justify this long is for market structure to develop slightly better than it is already. I want this high to come back down, maybe take this low out. Then I want to see more definite market structure before I tag that zone. So something like this. Then I dip into that zone, look for that retracement right there, and then look to enter that long there. So if something like that happened, that would be ideal. Okay. But if we got something as quick as this, where you've got your last lower high all the way up there. So let's say instead we get something like this, and then we get this. This I may not look to enter a long here. And even if I do look to enter a long here based on maybe like an internal flip like that, I would only be targeting just this high over here. And the reason I may not look to enter a long if that's the situation is because why would I enter a long? Where would I put my stop loss? Now, if I entered a long and I waited for price to break this level here, to close above that level, well, and I wait for retracement, let's say I get a retracement like that, Well, my long is going to look something like this. So let's say we enter that. That's a huge stop loss, massive stop loss just to target the top there, which is about two x, a two risk to reward. That's not great. That's not great. We're looking for at least 3x, at least 4x, 5, 6, 7x over here. All right. So that's definitely what I'm looking out for. But regardless, and we're going to plan for that potential anyways. So that is another long play that I will be looking out for. Probably not today, but probably maybe about Wednesday this week. It looks like that might take place. So that is long number one, long number two. It is worth checking. So it is worth checking. Let me just quickly check this zone here to see if we do have, any. Let's see if we do have any zones, any demand zones that we could get a reaction from. If we have a demand zone there, it would give us a little bit more confirmation that, this is a place worth watching out for. So let's quickly take a look. The 3 hour, the 2 hour. Okay. Well, nothing really screams at me at the minute, and I'm not really going to go further down. Nothing really screams at me. No, nothing really screams at me at the minute. So that's how I'm going to look to play that. So long number one, long number two. The question is, do we have any more longs from this region? I think I'm all right with those two trades. I think if those happen, I'll be pretty happy with those. Now, some of you might be thinking, actually, why don't I look to play this internal bear trend all the way up until the bottom? Now, I would say be careful of that. The reason I want you to be careful of that is because we're already quite close. With, we're already in discount and we're getting to the extreme discount. So you really don't want to be long in sorry, you really don't want to be shorting in extreme discount. Now, if you were to catch that short there, that would have made a bit more sense. Let's say you caught that retracement there to bring it down here. That would have made more sense. But that would have been tricky. Why? Because, hey, look, you did react off this 8-hour zone, so chances are you may have been a bit hesitant because you thought you were headed towards that, last lower high. Okay, so that's kind of the two longs I'm looking out for out of this range. Now, as far as shorts go, well, short number one, I think short number one is the obvious one. There's a short from the top. Then in case we get a nice 3-tap model where we've got tap number one, tap number two, for a nice little tap number three up there. Okay, so that will be short number one. That won't take place until maybe towards the end of the week if we get a rally up. And short number two, now I am hesitant to plan a short in the middle of our range. I just want to see what happens at the extremes rather than enter a short that's a little bit risky at the middle of our range. The reason is we are developing this nice curve liquidity over here. We can see this nice curve liquidity pool over here. Excuse me, there we go. And that can be quite bullish, so I won't be surprised if we come down here and then have a quick sweep of all these stop losses. We've got people who shorted here, 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 or still shorting along here. All right, that can easily get swept up in that move up. So I think that's why I'm actually just going to focus on those two longs. Now, it may be the case that, those two longs aren't the moves. And if that's the case, that's fine. That's completely fine. But we realize, hey, this is a weak targeted low. And because we're in a weak targeted low, now we do have a potential for a short, a continuation short that looks like this. Well, let's say this is our range. This is our range. And then we have our tap at the top. 1, 2, 3. This is what we've got so far. Obviously, we've got all this internal play that's going on at the moment. But let's say this breaks down bearishly. Or if it breaks down bearishly, that's quite bearish for us because that means we've got a break of structure here. And if that's the case, we're going to be looking for a retracement for that continuation down, especially because we know we've got all this inefficiency on the left-hand side, these fair value gaps that could easily get swept. Okay, now that retracement may not be a nice deep retracement. That retracement may just come up to the old extreme before it moves down. It may come up all the way up. It may come up all the way up here before it moves down. All right. But in order to decipher which is which, you're going to have to wait to see what price does as it breaks. Now, it's worth taking a look quickly before I leave you guys as to what the range, the volume profile looks like within this range. So if we simply just take that from that to over here, well, look, we are in our POC at the moment. We do have our value area low, which is confluent with our 45-minute zone. So that's a key region to watch for. So it's definitely something, I want to be looking out for. Now, if I actually get rid of that and see what the volume profile is from this low down here at the moment. Okay, so this isn't really telling us much, which is fine. And yeah, now the last thing you may want to consider as well is what's Mr. Fibonacci saying? What's Mr. Fibonacci saying? If we take that fib from the low to the high, then we look at the fib zone. Well, we have gone past that 786 levels, but we wicked it. We have wicked it. So there is a chance actually that we come back down to this line, this 786, react off this demand zone, this 45-minute demand zone, and then we move up. Okay, so that's how I'm playing this at the moment. Those are the trades I'm looking out for. And that's that. If you found this useful, don't forget to hit the subscribe, hit the follow. Hit me up on YouTube and Discord as well. Don't forget, we've got boot camp coming up at the last Sunday of this month. So feel free to reserve your seats, and I will see you guys there. Otherwise, hope you have a great weekend. And yeah, I'll see you tomorrow. Probably not tomorrow, maybe sometime in the week, maybe about Tuesday, Wednesday. Give these setups some time to mature. But just be careful, guys, because look, this steep move up, okay, and I will say this, the steep move up is indicative of a steep move down. If we start breaking below this level, chances are this breakdown is going to be quite rapid and it's going to be quite quick. So if you are looking to get that retracement here, make sure you are alert. And also, we're watching this zone for a nice long. But when the time comes, we will talk about that. Anyways, see you next time.